How's it going, guys? My name is Chris Mo. If you don't know me, I do $1 to $2 million in construction sales, got a 6-figure income, some passive investments, and I have nothing to sell you. I make these videos so I can document my life towards becoming a millionaire so I can help my grandchildren out. And if I can help others along the way, so be it. In today's video, I'm going to be talking about the 2 types of debt that no one ever taught us. You need to know the difference between these 2 types of debt because it's either going to determine whether you're going to be rich or broke. Make sure to stay until the end of the video because I'm also going to teach you how to turn one debt into the other and vice versa, something that no one teaches. So without further ado, let's get started. To please all the Karens of the world, I believe that we need to have a solid foundation of the understanding of words. So my best friend is Google, so let's look at the definition of debt from Google first so we can all have the same understanding of words. Because nowadays, we know how people get with assuming something means something else. Google says debt is something, typically money, that is owed or due, or the state of owing money, or a feeling of gratitude for a service or favor. Basically, debt is something we owe, right? Here's the thing though, many people actually see debt as a negative thing. We're actually taught by our parents in school that debt is bad. I even remember I had a class in college where they taught us that debt is actually a liability. And too much liability means a company might be in a bad situation. But that's not always the case. I'm sure we've all heard the saying, it takes money to make money, right? Well, what if I told you that not all debt is bad and there's actually good debt? And what if I told you that you can actually manipulate debt towards your favor? Let's break it down. Even though my accounting class taught us the wrong way to think about that, they actually did teach us something right about liabilities and assets. So I'm sure we've all heard of a balance sheet, right? It's one of the most important financial statements for a business. It tells you whether a business is profitable or not. Basically, it tells you how broke or rich a company is. Assets, liabilities, and equity are the 3 components that make up a balance sheet. Assets, when it comes to accounting, is basically everything a business owns. Liabilities is everything a business owes. And equity would be the difference between both of them. But we're not gonna focus on any of those 3 because we're not trying to be an accountant. Here in this channel, we're just trying to learn how to make some money and understand money. Okay, so what does this have to do with making money, right? Well, this is the secret. This is where you have to shift your mindset and start thinking of yourself like a business with your own balance sheet. However, your definitions for assets and liabilities are completely different. For us, assets is anything that puts money into your pocket, and liabilities is anything that takes money out of your pockets. The secret to building wealth is very simple. All you have to do is acquire more assets like the rich do instead of liabilities like the poor people do. But in order to do any of that, we have to acquire debt along the way. And that's okay. Listen up because this is where it gets real good. Liabilities equal bad debt because it takes money out of your pocket. And assets equals good debt because it puts money into your pockets. However, one thing that no one would ever tell you is that you can determine and manipulate what is an asset and what is a liability. You have complete control over that. Let me explain how this works. One of the most common things that everyone owns is a car, right? Poor people actually think of this as an asset because eventually they can sell it for some amount of money in the future, right? A car, when it comes to building wealth, is actually a liability Let me explain to you why. First of all, a car depreciates 20 to 30% the moment you drive it off the lot. On top of that, it takes money out of your pocket. You got the monthly payment, you pay for repairs, you pay for oil changes, you pay for gas, you pay for insurance. You see where I'm going with all of this? Ultimately, it's always taking money out of your pocket, which is why it's a liability. Don't buy that luxury car. It's not worth it. Who cares? No one's going to remember what car you drove 5 years from now. It's not worth it. Go ahead and save your money and invest it into something else. But wait, I know some people might say, but it makes me feel good. It brings me happiness. And I know there's a lot of people out there who just drive that luxury car because they want to impress others. Well, that's emotional wealth. And even though that's good, it's not gonna last, because eventually what's gonna happen is your financial wealth is going to hurt, and that is going to kill that emotion. So it won't last that long. So don't buy that luxury car unless, and here's the secret sauce, you turn that car into an asset. But wait, Chris, didn't you just say that a car is a liability? I did, but that only applies if it's for personal use. Nowadays, you can actually turn that car into an asset. And here's how. There's actually multiple ways, but one of the easiest ways is to actually go ahead and buy that car and rent it out on different platforms such as like Turo, where you can go ahead and just rent it out for a day or a week or a monthly time, where you can go ahead and start making profits out of that car. Now your car is actually putting money into your pocket instead of taking it out, and you turn that liability into an asset. So in order to determine if something is a liability or an asset, it's all in the matters of how you use it and what you use it for. And that is what no one is teaching. Whether something is an asset or a liability, it all depends. So let's go over a couple of examples to see if you actually understand what I'm talking about. First example, a dog. Is it an asset or is it a liability? If it's for personal use and just brings emotional wealth, then it's a liability. It's a liability because it costs money to feed him. You have to pay for its shots. You have to pay for insurance. If any medical expenses come up, it costs money to own a dog. But it can also be an asset if you're using it for business. Nowadays, we have a bunch of breeders out there who buy a luxury dog, make babies, and eventually sell those babies to earn a profit. Now that dog is an asset and it brings money towards your pockets. A home. Is it a liability or is it an asset? Well, it depends. If it's for personal use, then it's a liability. But why? Because people forget how much it really costs to be a homeowner. Think about it. You have your mortgage payment, your property tax payments, you have electricity bills, water bills, you got bills on bills on bills. It's expensive to be a homeowner. And homes are always just taking money away from your pocket. But it can also be an asset if you use it for business. I know there's a lot of people who actually buy homes, rent them out, charge enough rent to cover those expenses, maybe earn a little profit, and that's not taking into account the appreciation and the equity that goes into it. Altogether, it's putting money into your pockets and making you a profit. Let me give you a hard one. A boyfriend or a girlfriend? Is it an asset or a liability? Well, it depends, but it's real simple if you really think about it. If you're spending too much money on your significant other, buying gifts, going out to eat, going out to events, just spending money every single time, ultimately, that's taking money out of your pocket. People tend to forget how much it really costs to be in a relationship. It's expensive, especially being with someone who doesn't think about finances the way you do. I know a lot of guys out there who are spending so much money on their girlfriends, sometimes money they don't even have, which ultimately leads them to being broke. And the worst part about that is that when the boyfriend actually can no longer spend money on that girl would just leave, and vice versa. People don't like to date anyone that's broke, which is why it's really important you choose someone who has the same financial goals as yourself. But don't get me wrong, being in a relationship can also be an asset as well. You just have to choose someone that brings value into your life. I know there's a lot of couples out there who actually play this game of life in two players and actually achieve their financial goals a lot faster by working together. It all depends on who you decide to be with. So make sure that you make the right choice on that one as well. Ultimately, the list can go on forever. The point is that we need to rewire our brain so we start questioning every single decision we make. Every single time you're going to buy something, ask yourself, is this going to bring me value or is it going to take money out of my pocket? If it's something that's going to bring you money, but it takes debt to get it, why not invest in it? Wait for your return, and eventually that bad debt actually becomes an asset. It all really depends on how you use anything and everything. That's pretty much it. All you have to remember is if you're going to buy something or purchase something or invest in something that's $5,000 or $20,000, all you have to do is the math. How much do I have to spend? How much does it cost in expenses? And how much profit am I going to make? If it's negative, then it's a liability. If it's positive, then it's an asset. Hopefully this video helped clear things out on how you see every single purchase and every single investment. That way you make smart decisions. So if you liked the video, it brought value towards your life, go ahead and hit the like button, comment below if you have any questions whatsoever, and make sure you share the video. That way we can help others rewire their brain along the way, and I'll see you next time.